A very important market voice. Jinesh Gopani, head of equities at Axis Mutual Fund, joins us right now on the show with his thoughts on the markets. Well, I just so wish I could ask Jinesh about Sun Pharma, but Jinesh, don't worry, we will not talk about specific stocks. So rest assured on that. Just wondering, these days, is it becoming difficult to take large specific bets on pockets, because there are a lot of casualties or minefields that are happening? I mean, Jet Airways on a given day gyrates about 5, 6, 7%. Sun Pharma the last couple of days has fallen about 15-odd%. We've seen what's happened to Avenue Supermarts after the first day, or the first day reaction after the numbers disappointed as well. What's the mood of the market currently?
See, I think, to be frank, valuations have been higher on the Indian markets, especially on the names which are more domestic driven, where growth opportunities are very high. So slightest of the disappointment is likely to trigger a bigger sell-off. And unfortunately, even if you see the liquidity in the market is very poor. If you really see the FII data or the domestic data, net cash or net buy, if you see, it has been very, very poor in terms of the liquidity side. And hence, I think the trigger is very, very high if the results are a miss or if results are very good. So I think this is what we are seeing in the market. The depth of the market is not very good, and hence the shave off of the prices is very, very high.
Jinesh, good morning. Devina here. So as we're now comfortably, looking at Q3 numbers flowing in at a steady pace, so far the IT tech, the tech numbers that have come in have not disappointed the street. In fact, you've just seen, that pocket and the interest that's come about there just going through the roof. Aside from that, where are the pockets that you're going to be seeing disappointments versus pockets where you've anticipated more amount of positive bias coming in post the numbers?
So I think more on the mid and the small cap side, the disappointment could be higher. And given, as I said, the valuations are high from their averages, and the expectation of numbers are not coming to the expectation of what the analyst expectation has been. And hence, on the mid and the small side, we are more watchful and careful. On the large cap side, I think by far the private sector banks, the IT companies which you just alluded, and some of the other large cap companies should deliver decent numbers, maybe more than the estimates, but at least in line with the estimates. The more setback, we feel that it will be more on the mid and the small side, where we need to be careful.
For Pharma as a pocket now, what is the call, Jinesh? And the excitement around the tailwinds coming in from rupee depreciation, does that seem to have subsided?
No, I think if you really play rupee depreciation, then I think at this juncture, technology is a better play to play as compared to pharma sector. And unfortunately, the pharma sector's business model itself is going for a significant change, especially those who are exposed to US. The generic pricing has been coming off much more than the expectation what it was, let's say 3-4 years back. The approvals of ANDAs has been much faster by the US FDA guys, and hence the competitive intensity has gone up for the new ANDA approval as well. So let's say a company which was expecting $10-20 million of sales from one ANDA, suddenly that assumption has come off to, let's say, $5-10 million. So suddenly you have to work more harder in terms of ANDA filings, and it is more of a volume game now as compared to the value game. And we really feel that we are in that transient phase where many of these pharma companies are changing their business model, are investing huge into R&D for a new complex chemistry, and maybe another 1.5 years, and then you will again see some of the companies coming out to their past glories of let's say 15-20% growth trajectory. But really at this juncture, we don't expect numbers to be that great.
Okay. Interesting. So, Jinesh, am I understanding this correctly? That if you were to play export-oriented units, you rather play through technology as opposed to pharma?
Yeah, I think technology at this juncture, if you really see the commentary from all large tech companies, I think it has been fairly positive as compared to what it was, let's say, 1.5 to 2 years back. And that is also you are seeing in the stock price movement how technology has done well in last 12 months. So I think mood is good. Incremental news flows are not negative but more positive. Obviously, there is a risk of some expectation of US going into recession by December 2019, but very hard to predict at this juncture. So that we have to be watchful, but at this juncture the commentaries from the companies are much better than what it was, and some of the companies are now looking at double-digit constant currency growth, which bodes well in the given circumstances.
Jinesh, just comment on what could drive re-rating in stocks going forward. I mean, there was an interesting observation that was made that year on, you're actually not going to re-rate stocks based on the kind of growth numbers that they show, but the stability of those growth numbers. If you have a stability in the quarter-on-quarter growth numbers, that's what's going to trigger a re-rating in the stock versus just sporadic growth numbers that come in. Maybe a quarter you'll see a great number, the next quarter you'll see a dip. So the volatility the stability over the growth numbers.
Yeah, I think for last 2 years, especially after demonetization and GST coming into play, there has been, as you rightly said, the disturbing trends, and the trends have not been that great in terms of even companies coming out and saying that for this year a whole we can grow at this percentage point. So I think really there has been distortion. Normally we expect if a GDP growth rate is at 11-12% on a nominal side, you expect companies, some of the sectors and the companies which are directly linked to that tend to grow at 1.5x, 2x or 3x of GDP depending on the growth momentum of that sector. But at this juncture, that has been clearly broken. There are cases where companies are growing much better than the expectation, but there are many cases where companies are not able to live up to their expectations on the growth. So I think I think it is too early to say. I think you are going into an election season as well, which will have its own event to pass through, which will decide the economic situation after that. If all goes well, then I think the momentum will kick in and the expectation of growth rates will come back. But at this juncture, I think we have to be watchful, careful, and just ensure that the numbers where companies are delivering are good numbers and are not missing the estimates.
By the way, the stock of the morning continues to remain Sun Pharma. Jinesh, just stay on. Just want to mark what's happening. So the volume picture on Sun Pharma as well. It's down about 9.5%, 15 million shares traded already. And that's stark compared to the 20-day averages, which anyways are higher. By the way, that blue line is the 20-day average, and that too has inched up. As you can see, it's on a trajectory, which shows that the last 20 days the volumes have anyways gone up. But look at the volume spurt right now. 15 million shares traded in a matter of less than 15 minutes. Just shows the activity out here in Sun Pharma, and clearly something's worried the street. Yesterday, Money Life allowed institutional investors to come in and view the documents that were there with them. And I think that I would reckon that all of this is in part due to that development happening. So 9.5% gone for Sun Pharma in the session today already, and about 16 million shares traded already. Jinesh, as an institutional investors, how do you approach situations like these, wherein companies that have done really well and then suddenly they have a fall wherein a large institution can't really get out of those names? What do you do, and therefore what would an average investor do as well? Because as I said, there are a bunch of these examples in the last 15 days that we've seen already.
Yeah, I think, see, if you are still okay with the corporate governance structure and the businesses from a longer term point of view, then it's a good time to buy. But obviously, if there is something going wrong on the corporate governance side and even the businesses are not looking that great, then obviously the tendency is to exit for the time being and then evaluate the matter more in detail and then maybe participate if required. So I think different companies will go through different cycles, and really, frankly speaking, if there is a corporate governance issue, then things will take more longer time to come back. And if it is just a 1 quarter issue or a result issue where let's say margin squeeze is there or the growth rates have not come, then I think people give benefit of doubt and people remain invested in the story.
My final question to Jinesh Gopani really. Jinesh, based on whatever little you have observed over the last couple of quarters on the earnings front and the possibilities of we again missing out on delivering that 16-18% earnings growth, which seems to be a certainty. I was reading through the Axis AMC outlook for the year 2019 as well, and there were some mentions about the importance of earnings trajectory too. Would you reckon that there is a higher probability of there being some pullback in the markets from where we are right now, as opposed to we seeing a rally on the expectations of some stimulus measures being doled out ahead of the elections?
Yeah, see, it clearly depends on what kind of stimulus measures are being talked about. There are news around universal basic income and all those things. Obviously, as I said in my earlier remark, that election is now a bigger event than what we had thought earlier, and hence I think market will be more gliding towards how the outcome of this election comes. So next 3 to 4 months, we really feel that markets would be in a very, very tight range. And only after election, how the mandate comes, who comes back to the power, and how the and its impact on this economic stability or turmoil will decide the fate of the markets. So clearly, at this juncture, it is more of a news-driven market as compared to focus on the earnings. Earnings also, to some extent, has not been that great as per as the expectation was running when we started the year. So I think it is better to be on a wait and watch mode. No hurry to invest aggressively. And as things unfold, I think everyone will take a decision how to participate in the market.
All right, Jinesh, anything that your conviction is really strong in, any particular pocket, any particular pocket where you feel that the tides are changing? I mean, for example, a real estate, if that is something of interest to you, or larger interest spending coming in, or even where a lot of capital expenditure is expected.
So see, what we really feel that some of the secular sectors like BFSI space, consumption space will continue to do well, but obviously in some of the consumption space the valuations are high, but numbers have been in line with the expectation or maybe around the expectation. So that should continue to chug along well irrespective of this event. I think for the real estate or infra, all those things will have to really see only after election. Because the new government or the existing government, how the cabinet is formed, what is their vision, what kind of reforms they want to start, will only be known only once the new government comes back or the new government is formed. So I think it is better to wait and watch mode rather than going all out. At least from our channel checks, we are not seeing private capex taking shape in a big way. I'm sure even companies would be waiting for this event and take a bigger call with a 3 to 5 year view post the election. So I think it is more wait and watch across sectors. Some of the sectors which are not directly impacted by the election or the politics will continue to do well, and rest we really have to see once the election thing gets over.
All right. We leave it at that. Jinesh, thanks very much. Really appreciate you joining us this morning and sharing your thoughts on the channel with us.